oil prices have shifted in response to a diplomatic pause announced by President Donald Trump. WTI crude futures dropped toward $103 per barrel, while Brent crude hovered near $110. The decline followed a sustained rally that had pushed prices higher due to ongoing tensions in the Middle East. The immediate trigger for the price pullback was Trump's decision to delay a planned military strike on Iran. This pause came after Gulf allies, including Saudi Arabia, Qatar, and the United Arab Emirates, urged Washington to hold off, citing progress in negotiations. In response, Trump indicated that serious talks were underway, which raised hopes that a broader agreement could be reached without further escalation. The market reacted quickly, with traders reassessing the risk premium that had built into crude prices. This shift in sentiment caused a pullback in both WTI and Brent crude prices. While the diplomatic pause injected optimism, the situation remains unresolved. Iran has yet to confirm any renewed diplomatic breakthrough, and Tehran has remained cautious. As a result, uncertainty still looms over whether the talks will lead to a concrete agreement. The Strait of Hormuz remains. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. A central issue in the energy market. This vital waterway, which handles a significant share of global oil shipments, continues to face operational constraints from both U.S. and Iranian forces. The disruption limits the flow of crude, natural gas, and refined fuels, keeping global energy markets on edge. The Strait's role as a critical choke point means that even small disruptions can have outsized effects on oil prices. Any restriction there increases the risk of supply shocks, which in turn drives prices higher. The recent movement in oil prices reflects how quickly market sentiment can shift in response to geopolitical developments. Prices had climbed for more than a week as stalled negotiations and restricted shipping through the Strait of Hormuz tightened supply expectations. The Trump administration's pause in military action allowed traders to reassess the level of risk in the region. However, the market's reaction was not a full reversal of the previous rally. Prices retreated but remain elevated compared to earlier in the year. This suggests that while the immediate threat may have eased, the underlying tensions remain. The next signal to watch is whether Iran confirms renewed diplomatic engagement. If Tehran signals openness to a broader agreement, the market may see further downward pressure on oil prices. Conversely, if the talks stall or if new restrictions emerge in the Strait of Hormuz, prices could rebound. The Gulf allies' role in urging restraint is also worth monitoring. Their influence in the region is significant, and their continued support for diplomatic solutions could help maintain the current pause in tensions. However, if any of these countries shift their stance, or if new provocations emerge, the risk premium in oil prices could rise. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Again, for now, the market is in a holding pattern, waiting for more clarity on the diplomatic process and the status of the Strait of Hormuz. The key takeaway is that oil prices remain highly sensitive to developments in the Middle East. Even a temporary pause in military action can lead to immediate price adjustments. Investors and traders are closely watching for signs of progress in the negotiations and any changes in the operational status of the Strait of Hormuz. Until a more stable outcome emerges, volatility in oil prices is likely to persist.